A very good afternoon to all my dear students. How are you all? And today we have to complete our chapter number 8. But looking at the topics that are left, so I think that today 2 or 3 topics will be left in this chapter. That is chapter number 8, audit report. So most probably I'll be taking them in the session which is scheduled for your next chapter, which is chapter number 9. So we will spend around 20-25 minutes for completing chapter number 8 in the next session, and then we'll move forward with chapter number 9, right? And apart from this, students, again, as I always ask you, that whether you have gone through the module, most specifically chapter number 8, that is page number 8.45, that we have covered till where we have covered in the last session. So quickly send in your replies. Om Krishna Gupta is saying yes. Others also please reply. Others also please reply. Bhumika, Akshara, please reply. Shoaib, Sukaina. So I've got reply from Bhumika, Akshara, Om Krishna Gupta. These students are saying yes, ma'am. Others also please reply. So students, we were doing essay 705 in the last session, and whereby we have studied in advance in detail that it is basically with respect to the modification in an independent auditor's report. So modification to the opinion in the independent auditor's report, right? And then we understood about qualified adverse and disclaimer of opinion, right? Then we also understood as to when the auditor modifies the opinion, what changes will be there with respect to the opinion paragraph. So I'm not repeating it because now we have to cover today a number of important topics, right? So now I'll be starting from here. That is, what changes will be made to basis for opinion paragraph once the auditor decides to modify the audit report, right? So we all have seen the format when we were doing SS 700. So there you have seen that in basis of opinion paragraph, 4 points are to be included. So let me just take you to those 4 points once. Uh, just a minute. So with the basis of opinion paragraph, we studied it under SA 700, whereby you have seen that the basis of opinion paragraph will directly follow the opinion section, and there the auditor will state that the audit was conducted in accordance with essays. Further, a reference to the section where the auditor's responsibility have been mentioned in the audit report, that reference shall be given. Also, it shall include a statement that auditor is independent and has fulfilled with the relevant ethical requirements in accordance with like he has fulfilled all the ethical responsibilities. And last, that the auditor believes that he has obtained sufficient appropriate audit evidence to provide the basis of the opinion, right? And it forms an important context about the auditor's opinion. Now, when the auditor modifies the opinion, what changes will come with respect to the basis of opinion paragraph? So now this is the topic that we are going to discuss. So first and foremost, the heading is going to be changed. Like now it will not be basis of opinion, but it will be what? Basis of qualified opinion, or basis of adverse opinion, or basis of disclaimer, basis for disclaimer of opinion paragraph. Just a minute. Right? So the heading is going to change. Plus, along with that, the auditor is going to include a description of the matter because of which auditor has given a qualified opinion or an adverse opinion or disclaimer of opinion. So a description of the matter will be given, right? Now, if the material misstatement because of which, see, material is there, materiality of misstatement is there, because of that, there is what? A qualification. Whether it is pervasive or not, abhi I'm not talking about that. So I'm saying whenever auditor modifies an opinion, whether it is qualified or adverse or disclaimer, So material misstatement will be there. I hope this is clear to all of you. So when such material misstatement relates to a specific amount, along with the description, auditor will also include the quantification of the financial effects unless it is impracticable. So if it is practicable to quantify as to what is the effect of that material misstatement, auditor will specify that also along with this description, right? If it is not practicable to quantify the amount, auditor is going to state this fact that it is not practicable in the basis of opinion section, right? Further, if the material misstatement relate to a narrative disclosure, that is something that has been narrated in the financial statement, some disclosure that has been given in the financial statement. So auditor will include an explanation of how that disclosure is what materially misstated, right? And if the material misstatement is on account of non-disclosure of any financial information, in that case, see, what is the difference between this point and this point? Earlier point was that related to what? Narrative disclosure. That is, some wrong disclosure has been given. So auditor will explain as to how this disclosure is wrong. The next point says that if no disclosure is given, right, with respect to financial information, so what will auditor do? So you may get a 3-mark question here that during the course of audit, the auditor finds, or you can say the auditor is qualifying the opinion. He is giving a qualified opinion because of a non-disclosure of the financial information, which is important, which is material according to the auditor's professional judgment and his audit evidence that he has obtained, right? So what the auditor will state in the basis of opinion paragraph. So what are the auditor's responsibility? Now, with respect to non-disclosure of financial information, the auditor shall first of all discuss the non-disclosure with those charged with governance. Then he shall describe in the basis of opinion section the nature of the omitted information. What is the nature? And unless prohibited by law or regulation, so it is and, right? Auditor will include the omitted disclosures, provided it is practicable to do so and the auditor has obtained sufficient appropriate audit evidence with respect to the omitted information. So first and foremost, discuss with those charged with governance, right? Discuss with those charged with governance. Then in the basis of opinion, so you can say qualified opinion paragraph, right? Basis of qualified opinion paragraph, the auditor shall describe the nature of the omitted information and unless prohibited by law or regulation, auditor shall include the omitted disclosure provided it is practicable to do so, right? Now, if the modification is with respect to the inability to obtain sufficient appropriate audit evidence. So it is basically talking about what? The disclaimer of opinion paragraph or the qualified opinion. So modification is due to inability to obtain sufficient appropriate audit evidence. Then in the basis of opinion section, auditor is going to mention the reasons for inability, right? Simple. Further, when the auditor disclaims an opinion, this is really very, very important. So when the auditor gives a disclaimer of opinion, right? What is meant by disclaimer of opinion? That he is not in a position to give the opinion on the financial statement. So here in the basis of opinion paragraph, auditor will not give reference to the section where in the auditor's report where the auditor's responsibility are mentioned. If you remember, there were 4 points. So this point auditor is not going to mention. Also, he will not mention that sufficient and appropriate audit evidence has been obtained. Why? Because of the inability to obtain sufficient appropriate audit evidence, he is giving what? Disclaimer. This is disclaiming the opinion. Is it clear? Right? So, what will be included when the auditor is giving a disclaimer of opinion? What will be included in the basis of opinion paragraph? So, first of all, you have seen that out of those 4 points, these 2 points shall not be included, right? And if you remember that we have done the auditor's responsibility, 3 sections, right? Now, with respect to disclaimer of opinion, what will be the description of the auditor's responsibility? So instead of all those things that we have done in the last session, when the auditor is disclaiming an opinion on the financial statement, he will include only the following in the auditor's responsibility. So all those three parts, if you remember, the auditor shall state, the auditor shall further state, the auditor shall also state, right? So auditor will not mention all that, but only these 3 points that the auditor is going to mention. So first and foremost, see, if you remember, I've told you in the opinion section also that auditor will not mention in case of disclaimer of opinion that we have audited, but we were engaged to conduct the audit, right? So a statement that the auditor's responsibility is to conduct an audit of entity's financial statement in accordance with essays and to issue an audit report. So first and foremost, this was our responsibility. A statement, however, that because of the matter described in basis of disclaimer of opinion section, the auditor was not able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion on the financial statement, right? So here, what is the auditor's responsibility? To conduct the audit in accordance with essays. We are not saying we have conducted, right? And then in the basis of opinion section, that because of the matter that has been described in the basis of opinion section, the auditor is unable to obtain sufficient appropriate audit evidence. And lastly, a statement about the auditor independence and other ethical requirements as given in essay 700 that the auditor is going to mention. Further, when the auditor disclaims an opinion, in that case, auditor cannot include a key audit matter in terms of essay 701. What is a key audit matter? We are going to discuss just after completing essay 705, right? Further, when the auditor wants to modify the opinion, right? See, he cannot modify the opinion on his own as such. He will have to communicate with those charged with governance before modifying the opinion. What is he going to communicate? The circumstances that had led to the expected modification. That auditor is going to tell to those charged with governance that, see, because of these situations, we are going to modify the opinion, and also the wording of the modification, that what wording they are going to mention in the financial statement. See, student, the wording that the auditor is going to use, that is going to have a great impact on the intended users of the audit report or the audited financial statement. So those charged with governance must be aware about the circumstances as well as the wording, right? So I hope essay 705 is clear to you. Quickly send in your replies. This was all about essay 705, and now I'll be quickly starting with essay 701. So Om Krishna Gupta, Bhumika, these students are saying clear, Swati saying clear, that's good. That's good. So now let us start with essay 701. This is a very important and a quite lengthy chapter also. If you just see that important essays are there in this session. So I'll just quickly start with the next topic for today. Just a minute. So essay 701 is communicating key audit matters in the independence auditor report. Communicating. Just a minute. So it is communicating key audit matters in the independent auditor's report, right? Now, essay 701 deals with the auditor's responsibility to communicate key audit matter in an audit report. So what are key audit matters? See, these are the matters that the auditor finds that these are significant in the audit of the financial statement. So during the year when the auditor was conducting the audit, and he discussed certain matters with those charged with governance, right? Out of those matters, certain matters which the auditor considers in his professional judgment that are of most significance in the audit of financial statement of the current period, right? So those matters, and which now auditor consider them as significant and wants the users of the audited financial statements and the audit report he wants the users also to understand that these were certain significant matters. So those who will become what? Key audit matters. Key audit matters, as the name suggests, significant audit matters. But one more thing is there, that these are selected from the matters which were communicated with those charged with governance in terms of essay 260. If you remember, there were significant findings, significant difficulties he encountered, right? Significant findings during the course of audit, right? So let us just see as to what SA 701 says. So it deals with the auditor's responsibility to communicate the key audit matter in the auditor's report. So let me just show you once that how such matters are communicated. So I've just copied a relevant extract the relevant portion from one of the published audit report. So see, key audit matter. So auditor is going to first mention that this is relating to revaluation of property, plant and equipment. So this is the matter which auditor finds significant according to his professional judgment, and he discussed this matter with those charged with governance during the course of audit also, right? Further, not only the matter, but also how our audit addressed such key audit matter. So suppose there was, as given in the example, certain thing relating to revaluation of PPE. So auditor is going to mention how the same was addressed by the auditing. See, our audit procedures included that we read and assessed the company's accounting policies. We evaluated the design and tested the operating effectiveness of IC. We obtained from the company management report on valuation. We assessed the competence, objectivity, independence of the valuer. We assessed whether change in valuation was accounted by the company within the revaluation reserve. We assessed the disclosures, right? So how the same was addressed, this the auditor is also going to mention in the audit report. So this is just an extract of the relevant portion, right? So what auditor is going to address? So he will address the matters which in the auditor's judgment are key audit matters, and here auditor is going to decide as to what to communicate and the form and content of such communication. So what to communicate, I can say what will be the key audit matters and how he is going to present those matters, or how he is going to communicate those matters through his audit report, right? So why key audit matters? What is the purpose of this essay? So basically, when the auditor adds key audit matters, so as the name suggests, these were the significant audit matters that he discussed with those charged with governance, right? So when such matters are mentioned, it enhances the communicative value of the audit report. So it is communicating to the intended users of the audit report that see, these were the key audit matters that were significant in auditor's professional judgment and that were discussed with those charged with governance also. So it enhances the communicative value. Again, very simple, greater transparency is there. Why? Because everything is mentioned there, right? It provides additional information to the intended users. Simple. It assists the user to understand the entity and significant management judgments. So for example, auditor discusses one of the significant management judgment relating to, let's say, the estimates with those charged with governance. Auditor may make it one of the key audit matters if in his professional judgment that is significant, that is of most significance, right? So what are the objectives of the auditor? First of all, to determine what can be a key audit matter, and then having formed an opinion, communicate key audit matter in the audit report. So student, one more important thing is that this key audit matter, this is not going to affect the auditor's opinion. So that is why it is mentioned that having formed an opinion is a separate matter that has been formed. Auditor decides to communicate key audit matter in the audit report. Now, one more topic is there, that what are the companies where key audit matter needs to be compulsorily, mandatorily it is required, right? And you will see that with respect to, let's say, listed companies, auditor has to mention what key audit matters. And even if there is no key audit matter, now auditor will mention that also, that no key audit matter have been come across during the course of audit, right? So applicability is in case of listed entities or where it is required by law or regulation, for example, in case of public interest entities, or where the auditor decides to communicate key audit matter, for example, where large number of stakeholders are involved, for example, financial institutions, banks, insurance, charitable institutions. So auditor may decide to communicate the key audit matters. And when auditor gives key audit matter, he cannot disclaim the opinion. So if there is disclaimer of opinion, there cannot be key audit matter. Why? Because on one hand, you are saying that you are unable to obtain sufficient appropriate audit evidence. On the other hand, you are saying that this was a significant matter, right? So whenever disclaimer of opinion is there, key audit matter cannot be there, right? Now, how the auditor is going to determine as to what is a key audit matter? First of all, it will be a matter from those which were discussed with those charged with governance. Further, that required significant auditor attention. Okay? So when the auditor is determining as to what can be a key audit matter with respect to the audit of the financial statement, he will consider these things, that it should be from a matter which is discussed from those charged with governance and that required significant auditor attention. So auditor worked on that matter, significant auditor attention. Further, when the auditor is determining as to what can be key audit matter, he shall take into account three things. Auditor is going to take into account three things. What are those three things? See, it can be any key audit matter can be a matter with respect to areas of higher risk of material misstatement and significant risk. So when the auditor is identifying and assessing the risk of material misstatement in terms of SA 315, auditor may during that also came across matters which have higher risk of material misstatement and which poses significant risk. So out of those matters, any of the matter that is discussed with those charged with governance, that can be a key audit matter. Significant auditor judgment is involved. So when the auditor is determining as to whether a particular matter is key audit matter, he'll consider as to whether his significant auditor judgment was involved and effect of significant event and transaction during the period. What was the effect of that significant transaction during the period? After considering all these things, after considering this point, auditor will apply his professional judgment in order to consider whether it is, you can say, it can be communicated as a key audit matter, right? So objective was to first of all determine, then to communicate. Now how to communicate? So separate heading will come, key audit matter, and then with respect to each key audit matter, appropriate subheading will come. If you remember, I've just shown it to you. So key audit matter, one heading, and then with respect to every key audit matter, a separate subheading is going to be mentioned, right? And then what will be the introductory language? So you may get a question that so and so you are conducting the audit of a company and during the course of audit, you decided to communicate it as a key audit matter. Draft a key audit matter paragraph, or what should be the introductory language. So first of all, auditor is going to define as to what is key audit matter. So now you all know that key audit matters are the matters which in the auditor's professional judgment are of more significant, and they are selected out of the matters which are communicated with those charged with governance, right? Further, in the introductory language only, auditor is also going to mention that auditor do not provide a separate opinion on these matters. So no separate opinion is mentioned. If you remember, we have seen that having formed an opinion, so opinion has been formed. The auditor decides that what are to be considered as key audit matters and communicated, right? Another important question, so you may get a 4-mark question here, that key audit matter. So when the auditor communicates any matter as key audit matter, it is not a substitute for So it is not a substitute for disclosure in financial statement. So it cannot happen that management and auditor agrees that, okay, you mentioned this matter as key audit matter, we will not disclose it in the financial statement. If any disclosure is required in the financial statement, that is to be given, right? Modified opinion. So it cannot happen that auditor is giving an unmodified opinion and mentioning that matter in the key audit matter paragraph. If the opinion is to be modified, it will be modified, right? For a material uncertainty going concern section, so SA 570, you all know that if there is a material uncertainty relating to events and conditions that may cast significant doubt on the entity's ability to continue as a going concern, then as per SA 570, the auditor needs to mention it, and in terms of SA 700, the auditor needs to mention it in a separate section, material uncertainty relating to going concern. So mentioning the matter in the key audit matter paragraph section is not a substitute for this section. Again, giving a key audit matter paragraph is not a separate opinion on the individual matters. This do you all know why? Because having formed an opinion, auditor, so the purpose is that auditor found that this matter was of most significance during the course of audit, and he has discussed that matter to those charged with governance. Then he'll communicate it as key audit matter to the users, right? So, what all communication is required with those charged with governance? So, first of all, we are saying that auditor will communicate with those charged with governance now. So matters determined as key audit matter. So auditor is going to discuss with those charged with governance that, see, out of all our discussions, I'm finding these matters which I will be communicating as those charged with governance. And if the auditor determines that there are no key audit matter to communicate, he will mention this fact also in the audit report. How the auditor is going to mention it, I'll just take you through the module for this, for better understanding of this. So we are on page number 8.51. See, key audit matters, communicating the key audit matters in the independent auditor report. So it addresses, first of all, both auditor's judgment as to what to communicate and then form and content, right? Then what are key audit matters? Which in the auditor's professional judgment, keywords are of most significance in the audit of financial statement of the current period. And these are selected out of the matters which are communicated to those charged with governance. What is the purpose? I told you, see, I made those points out of this paragraph that it enhances the communicative value, greater transparency, additional information to the users, helps them in understanding those matters, right? And then it assists the intended users in understanding entity and the areas of significant management judgment, right? Objective is, again, first is to determine key audit matter and then is to communicate. Now, when the auditor is determining, first of all, it should be out of the matters which were discussed with those charged with or which were communicated with those charged with governance, and auditor will take into account these three things: that areas of higher assessed risk of material misstatement and significant risk identified in accordance with SS 315. Significant auditor's judgment relating to the areas in financial statement that involve significant management judgment, including accounting estimates that have been identified as a high estimation uncertainty. And last but not the least, the effect on the audit of what significant events or transactions that occur during the period. Is it clear? Then communicating. So first of all, auditor in the it's mentioned that, see, the auditor will shall describe each key audit matter with appropriate subheading, and the main heading will be what? Key audit matter. And he'll state that first of all, he'll define. So this is the definition that is given, and then that these were addressed in context of audit of financial statement as a whole and informing auditor's opinion, and the auditor does not provide a separate opinion. So auditor is going to mention this specifically, right? Then communicating key audit matter is not a substitute for disclosure in financial statement, because that too management has to give. Expressing expressing modified opinion, or a substitute for reporting in accordance with SA 570 relating to material uncertainty, right? And then a separate opinion on individual matters. So what the auditor is going to communicate to those charged with governance, he will tell those charged with governance that, see, these are the matters that I have determined as key audit matters, and also he'll see, and if applicable, depending on the fact circumstances, the auditor's determination that no key audit matters to communicate in the auditor's report. So that also auditor is going to tell those charged with governance that there is no key audit matter. So see, the following illustrates the presentation in the auditor's report if the auditor has determined that no key audit matter. So this fact will also come, that except for the matter prescribed in basis of, let's say, qualified or adverse opinion section or section as per SA 570, that is material uncertainty, we have determined that no other key audit matters to be communicated in our report. So this fact is to be mentioned. So under the head key audit matter, auditor is going to mention this. So first of all, he'll define as to what are key audit matters, then he's going to mention this also. Is it clear? Is it clear? So this is a summary of your essay 701. Quickly send in your replies with whether it is clear. Then I'll be starting with essay 706. So as I'm telling you that a number of topics that I really want to finish today. Om Krishna Gupta, Sukaina are saying clear. Sunil Gangadev, Bhumika, Shoaib, Swati, please reply. Chalo. So let us start with the next essay, which is essay 706. And the name of the essay is Emphasis of Matter Paragraph and Other Matter Paragraphs. So EOM paragraphs or other OM paragraph in the independent auditor's report, right? So see, when there is any matter, so basically this emphasis of matter paragraph or the other matter paragraph, these are a kind of additional communication. Additional communication to whom? To the users of the audit report, right? Now, just try to understand the basic idea about this essay, and then I'll take you through the notes or the module and the summary, right? So when during the course of audit, auditor finds that there is any matter which has been appropriately presented and disclosed in the financial statement by the company or the management, right? However, in auditor's professional judgment, those matters which are appropriately disclosed, presented by the management, those are important, those are significant, those are necessary for users' attention also. So in order to draw the user's attention to those matters which are specifically disclosed in the financial statement, in the notes to accounts of the financial statement, auditor will mention that matter in emphasis of matter paragraph. So in the emphasis of matter paragraph, auditor will mention that this matter has already been disclosed by the company in note number so and so on page number so and so. So you may ask me why auditor is doing so, because he wants to draw the attention of the users, because he finds that the user, for his understanding of the financial statement, the user must read this relevant note. Is it clear? Is it clear? So this is about what? Emphasis of matter paragraph. Example can be, see if there is any significant subsequent event which has been appropriately disclosed by the management. But the auditor also wants to draw the attention of the users to that matter. So in that case, auditor may mention it in EOM paragraph. Any early application of new accounting standard is there. The same has been disclosed by management. Auditor also wants to draw the attention of the users. Any major catastrophe is what? A disaster, right? The same has been disclosed, but auditor also wants. Any uncertainty with relating to future outcome, with example, with respect to any exceptional litigation, management or the company has given disclosure, but the auditor also wants to mention it in his audit report, because it is important for the user's understanding of the financial statement. This is what EOM paragraph, emphasis on matter paragraph. So quickly tell me, is auditor's opinion modified with respect to this paragraph as such, with respect to this matter? Quickly send in your replies. So absolutely correct. The way we said that key audit matter paragraph is not a substitute for modified opinion, same way. And if you remember, when the auditor gives the key audit matter paragraph, he defines what is key audit matter, and then he also mentions that our opinion is not modified with respect to this matter. Same way, here also auditor is going to mention this. So this is with respect to what emphasis on matter paragraph. Let us just quickly have a look at emphasis of matter, and then I'll explain other matter, right? So SA 701, it deals with additional communication necessary to draw users' attention. Just keep in mind the discussion that we have just had. You will be able to understand this essay very easily and very quickly. So additional communication necessary to draw users' attention. So it can be of two types. So draw users' attention to the matters presented and disclosed in financial statement, which are important for the fund or are important to fundamental to users' understanding of financial statement. So these are already presented, disclosed by the company in the financial statement, but these are so important, so fundamental to the user's understanding of the financial statement that auditor is ready to give an additional communication with respect to such matter, right? So the language, again, it says that having formed an opinion, auditor finds that in order to draw, auditor consider it necessary to draw users' attention by way of a clear additional communication in audit report, right? And what is emphasis on matter paragraph? What is the definition given by SA 706? So it is the paragraph included in audit report which refers to the matters appropriately disclosed in financial statement that in the auditor's judgment are important for or fundamental to the user's understanding of the financial statement. Right? So what are other matters now? So other matter paragraphs are those other than those presented in the financial statement. So other than those presented in the financial statement, which are relevant to the user's understanding of, I'm not saying of financial statement, I'm saying of audit, auditor's responsibility and audit report. So EOM में तो क्या आएगा? The matters which were already been disclosed by the company and they are important, fundamental to the user's understanding of the financial statement. And just think logically, na, the matters which are of which are important for the user's understanding of audit, auditor's report, audit report. Why will management mention that? So that is why it is not mentioned, that already disclosed in the financial statement. So matters other than those presented, disclosed in financial statement, relevant to the user's understanding of audit, auditor's report and audit report. So auditor may include it in other matter paragraph. So let us now just have a look at the definition of other matter. So other matter is paragraph is a paragraph included in audit report which refers to the matters other than those disclosed in financial statements that in the auditor's judgment are relevant to users' understanding of audit, auditor's responsibility and audit report. Clear? Right? And when the auditor is giving EOM paragraph, so you have understood what is the objective, what is EOM paragraph and what is OM paragraph. Now the next topic as to how the auditor is going to give EOM paragraph, right? So first and foremost, the auditor shall include EOM paragraph in the audit report provided. See, auditor is not required to modify the opinion as a result of that matter. So the matter will come in EOM paragraph if and only if because of that matter there is no modification. So auditor is not required to modify opinion as a result of that particular matter. And when SA 701 applies, matter has not been determined as key audit matter. So if that matter has been determined as key audit matter, then it will not come in EOM paragraph. It will be shown as key audit matter only. So two things are to be seen, that modification with respect to that particular matter should not be there. And then that matter should not be a matter to be communicated in terms of SA 701 as key audit matter. Clear? Now, how will it come? Again, it will come as a separate section, and the heading will be what? Emphasis of matter. Emphasis of matter. So the heading of that paragraph will be emphasis of matter, right? And then there will be a clear reference of matter being emphasized, that what is the matter. The relevant disclosure in financial statement. So auditor is going to mention that this is the note number in the financial statement, and auditor will indicate that the auditor's opinion is not modified in respect of that matter so emphasized. Is it clear? So how the same will come? First of all, because of that matter, there should not be any modification, because that matter should not be considered as key audit matter in as per 701. Why? Because if it is a key audit matter, then it will come in under key audit matter paragraph, right? Then auditor will show it in a separate section, and the heading will be emphasis of matter paragraph. A clear reference will be given to three things. What are those things? The matter being emphasized. What is the matter? So relevant disclosure in financial statement, the note number whereby the disclosure has been made, and the fact that the auditor's opinion is not modified in respect of such matter so emphasized. Is it clear? Example we have already studied, and again a 3-mark question can come here, and in fact you may get a 3-mark question here also. Right? So another point can be EOM paragraph is not a substitute for, again, modified opinion, disclosure in financial statement, or reporting in terms of SA 570. Simple. Just a minute. Right? Then the next topic is how OM paragraph will come. So the auditor shall include other matter paragraph provided it is not prohibited by law or regulation, and the same is not determined as key audit matter. Further, a separate section will come, heading will be other matter, and if the auditor, again, see, if you remember when we discussed SC 260, we saw that auditor will communicate to those charged with governance any modification that he is going to make in the audit report. Right? So when the auditor expects to include EOM or other matter paragraph in the audit report, he is going to communicate the such expectation. Such expectation means what? That I'm going to include EOM or OM paragraph, along with that the wordings also, that what he's going to mention as EOM or in the EOM and OM paragraph. Right? So with this, we have completed SA 706 also. Let me just take you through the module once, and then you just tell me whether it is clear or not. First of all, let us just go through the module. We are on page number 8.47. So the name is what? Emphasis of matter paragraphs and other matter paragraphs in the independent audit report, and the number is what? SA 706. So it is what? Additional communication. So it is additional communication only now of the matters which auditor considers necessary either for the user's understanding of financial statement, which have been appropriately disclosed in the financial statement, or the second is what? Other than those disclosed in financial statement, relevant for users' understanding of audit, auditor's report, and the audit report, auditor's responsibility and the audit report. So these are the 2 points. Draw users' attention to matters presented disclosed in financial statement that are of such importance that they are fundamental to user understanding of financial statement, or draw users' attention to any matters other than those presented disclosed in financial statement that are relevant to users' understanding of audit, auditor's report, or the auditor's responsibility, or the auditor's report. So what is the objective? So the objective is, having formed an opinion on the financial statement, to draw users' attention when in the auditor's judgment it is necessary to do so by a clear additional communication of what? Again, the two matters have been discussed here. So what is the definition? I hope it is clear to you. Now, when the auditor is giving EOM paragraph, first of all, first and foremost, the auditor would not be required to modify the opinion in accordance with SA 705 as a result of that matter. If that matter has led to modification, it will not come in EOM paragraph. Further, it is not SA 701, that is key audit matter. How will it come? A separate section with the heading emphasis of matter paragraph. So first of all, separate section, and the heading will be what? EOM. Then a clear reference to three things, that is what is the matter that has been emphasized. Then it shall also refer to the only to information presented or disclosed in the financial statement, right? See, to the matter, and then to where relevant disclosures that fully describe the matters can be found in the financial statement. So it will be mentioned that note number so and so and page number so and so. Further, it shall indicate that auditor's opinion is not modified with respect to the matter so emphasized. So this, you may get a 4-mark question as to what can be the circumstances. Give examples when it is necessary to include EOM paragraph, right? Then EOM paragraph is not a substitute for the modification for the disclosure in financial statement and reporting in terms of SA 570, right? And do this illustration as a homework. Other matter paragraph. So it is necessary to communicate other matter paragraph. So this is with respect to those matters other than those disclosed in financial statement, when, which in the auditor's judgment is relevant to users' understanding of audit, auditor's report, and auditor's responsibility. So when can auditor give OM paragraph? When it is not prohibited by law and regulation, and when it is not KOM wala matter, that is KAM wala matter, that is SA 701. Separate section will come, a separate heading will come of the other matter. And then auditor is going to communicate to those charged with governance the expectation that I'm going to use EOM and OM paragraph and the wording. So with this, we have finished SA 706 also. Quickly tell me. So today I have completed SA 705, a little part which was left in the last session. Then SA 706 and now SA 701 and now SA 706. And after that, as of now, I'm leaving 3 essays which are given in this module. That is SA 710, SA 600 and SA 299. So these are very small essays, very easy essays. So even if today also we get time after completing CARO 2020, I'll finish those essays today itself. And if not today, then as and when we'll be starting the we'll have a session scheduled for chapter number 9. So before starting with these reporting requirements, which are given on page number 8.68, quickly send in your replies, whether it is clear. SA 705, 701, 706. Swati is saying clear, others, Om Krishna Gupta saying clears, others also please reply. So a Bhumika saying clear. Chalo, that's good. Now we'll be starting with the reporting requirements under the Companies Act 2013, which are given on page number 8.68. Let me just open the concerned file. Just a minute. So SA 710, 600, 299. As of now, I'm leaving them. I'm skipping them for now. So do you have any understanding about section 143, subsection 1 and subsection 2 of the Companies Act? Quickly send in your replies. So Bhumika saying yes. Others also please reply. Om Krishna Gupta saying yes. Chalo, theek hai. Quickly we will go do these requirements. So these are given on page number 8.68 of your module. So students, I'll not be discussing the entire section 143, subsection 1 as such here. But see, try to understand this. These are what the reporting responsibilities of the auditor, which are required as per Companies Act 2013, right? So we will be discussing section 143, subsection 1, only the relevant portion that is given in a module. Then 143, subsection 2, again the relevant portion given in a module. And then 143 subsection 9 will come, a discussion of subsection 9, a discussion of section 143 subsection 11, and then we will proceed with your CARO 2020. Okay. So see section 143 subsection 1, it is basically containing the rights as well as the duties of the auditor. So the auditor has a right of access to books of accounts and vouchers of the company, whether kept at registered office or at any other place, right? Now we are talking about the reporting requirements as required by Companies Act. So abhi tak whatever you have studied, those were the reporting requirements as per the standards on auditing, SA, right? Now we are talking about the Companies Act, so the reporting responsibilities under the Companies Act. So section 143 subsection 1 says that auditor shall, so the term used is what? Shall. Auditor has to inquire. Now just give me an answer. Is there any difference between the term inquire and the term report? Just write yes or no. Is there any difference between these two terms? Quickly send in your replies. Bhumika saying yes. Swati saying yes. Others? Om Krishna Gupta saying yes, right? So student, you will see that 143.1, it talks about the auditor's responsibility, or you can say it says that auditor shall inquire. So there are matters, there are 6 matters that are given. So the auditor is required to inquire with respect to those matters, and as such, he is not required to report on the above matters. So he is not required to report on the above matters unless the auditor has special comments to make on any of the item. So if the auditor has any special comments, he will mention that. Otherwise, he'll just inquire. So if he's satisfied with the inquiry, there is no further duty to report as such. So when is the auditor required to report with respect to such 6 matters? When he finds the answer to those matters in adverse, right? So we have understood as to what are the response, or what is the responsibility, reporting responsibility with respect to section 143 subsection 1. So auditor shall, so it is not saying report, it is saying auditor shall inquire into the following matters. So what are those matters? Very simple matters. So just a minute. So auditor shall inquire that whether loans and advances have been made by the company on the basis of security, and in that case, whether that loan and advance has been properly secured. Further, the terms of those loans and advances, whether these are prejudicial to the interest of the members or the company. Right? So auditor is going to inquire. Now, if auditor finds that no loan and advances has been given on the basis of security, then okay, nothing is to be done. Further, if auditor finds that okay, loans and advances have been given, they are properly secured. Okay. Terms are also not prejudicial to the interest of the members of the company, then he has inquired, that's it. However, if the response to this point is in negative, is in adverse, that the loans and advances are not properly secured, or the terms are prejudicial to the interest of the members of the company, then the auditor is going to report. Are you able to understand the idea about this section? right? So auditor shall inquire into the following matters. First is whether the company has given loans and advances on the basis of the security. If yes, then whether the same is properly secured and the terms are not prejudicial to the interest of the members of the company. Is it clear? Right? Then whether transactions are represented merely by book entries and the same should not be prejudicial to the interest of the company. So if the transactions that are represented merely by book entries, so whether these are prejudicial to the interest of the company, right? Then in case of the company other than investment and banking company, so we are not talking about, this point is not applicable with respect to investment or banking company. So in case of the company, so much of the assets that consist of shares, debentures or other security, whether the company has sold such assets. So the assets, so this shares, debentures and other securities, these are basically the company has bought them and the same has been shown as asset. So whether this has been sold at a price which is less than the cost price, or you can say the purchase price. Prejudicial is harmful, which is not in interest of the which is prejudicial to the interest of the company. So basically harmful to the interest of the company. There was a query. Whose doubt was it? Shoaib, is it clear? Prejudicial, harmful. Okay. So the C point says that other than, this is not applicable with respect to investment or banking company, other than these companies, if the company has the assets consisting of shares, debentures or other securities, whether they have been sold at a price less than the purchase price. Whether the loans and advances, so I'm talking about D.9 point now, whether the loans and advances made by the company, these has been shown as deposits, right? Whether the personal expenses have been charged to revenue, right? Whether this, whether in the books of accounts it has been stated that the shares have been allocated for cash, whether cash has actually been received, and if no, whether such position has been stated in the books of accounts and balance sheet is correct, regular and not misleading. So auditor is going to inquire about such matters. However, he is not required to report as such with respect to these matters. If he has any special comments to make with respect to any item, then only he is required to report. So if he is satisfied as a result of the inquiries, he is no further duty to report. He is required to report if he finds answering adverse. Is it clear? Shoaib, is your doubt clear? So let me just take you through the module also. So under section 143 subsection 1, auditor shall inquire, very, very important, the following matters. Whether loans and advances made by the company on the basis of the security have been properly secured, and whether the terms on which these have been made are prejudicial to the interest of the company or its members. Whether the transactions merely presented by book entry are prejudicial to the interest of the companies. So adverse means that adverse for the company. So if the answer is yes, the terms and conditions are prejudicial, then the same needs to be reported. Whether the company not being an investment or banking company, where so much of the assets of the company as consist of shares, debentures, other securities have been sold at a price less than the price at which they were purchased, where loans and advances made by the company have been shown as deposits, where the personal expenses have been charged to revenue, and last but not the least, whether where it is stated in the books of accounts that any shares have been allotted for cash, whether cash has actually been received in respect of such allotment, and if no cash has been actually received, then whether the position as stated in the accounts book and the balance sheet is correct, regular and not misleading. Again, this is the same paragraph that we have discussed, and this is important. The auditor is not required to report on the matter specified in subsection 1 unless he has any special comments to make on any items of the matters items referred therein. If he satisfies as a result of inquiries, he has no further duty to report. Therefore, it could be said that auditor should make a report to the members in case he finds the answers to the above in adverse. Is it clear? Is it clear? ठीक है. Now, with respect to section 143, subsection 2. So, now you will see that here the term will be what? Report, right? So the name is what? This is relating to reports on account examined. So this section says that the auditor shall report. So here it is not inquire, it is what? Report. So auditor will report. So even if, let's say, one of the points is whether accounting standards have been complied with or not. So if they are not, whether complied or not, auditor is going to mention it, that the company has complied with the accounting standards, or in the other case, the company has not complied with the accounting standards. So he shall report, right? So the auditor shall make a report to the members on the accounts examined on every financial statement required under the act to be led before the company in the general meeting. So whatever financial statements are to be led before the company in the general meeting, auditor is going to make a report on those accounts examined and on those financial statements. And when the auditor is going to report, see, this is such a simple point. It says that when the auditor is going to report, that report shall be after taking into account the provision of Companies Act, the accounting standard, the standards on auditing, the matter to be included in audit report under this act, under the Companies Act, and the rules made thereunder, and under subsection 11, that is CARO 2020. So it basically says that auditor is going to report after he has considered provisions of Companies Act, the accounting standards, the standards on auditing, additional matters that are to be included in audit report under this act or the rules made thereunder, and more specifically under subsection 11, which is relating to what? CARO. Simple. Now, what are the matters on which the auditor is going to report? Right? Further, you all know that auditor has to report whether to the best of his knowledge and information the said accounts represent a true and fair view of the state of affairs of the company as on the end of the period, and P&L and cash flow for the year. This is simple, right? Further, section 143 subsection 3 says that the auditor shall also state. Now, again, a different reporting requirement is there with respect to Companies Act 2013, right? So 143 subsection 1 mein kya hai? These are the points relating to what? Inquiry of 6 matters. Then 143 subsection 2 says that the auditor shall report to the members. And when he's reporting, he'll take into account all these things, right? And then 143 subsection 2 says that auditor has to report that whether to the best of his information and knowledge, the said accounts give a true and fair view. Simple. Now, section 143 subsection 3. Is it clear? Let me just have a look at your thumbs up, then I'll proceed further. Section 143 subsection 3 we are going to start. Is it clear so far? Right. So Supriya is saying yes, it is clear. Further, in terms of section 143 subsection 3, auditor shall also state. So now auditor shall also state. So auditor's report shall also state. So this is required whether or not the answer is in positive or negative. Right? So what are those matters? First, auditor will mention that whether he has sought and obtained all information and explanation that is required during the course of audit, and if not, the details of that information and the effect of such information on the financial statements. So let me just take you through one audit report once, just the sample that is given in your module itself. See, we discussed that in the last session also, I think. Just a minute. See this. So we have discussed all these things, auditor's responsibility and everything. Now see, report under other legal and regulatory requirements. So CARO 2020 mein to we will be doing it just now. Now section 143 subsection 3. So we report that We have sought and obtained all information and explanation which to the best of our knowledge and belief were necessary for the purpose of audit. So since it is mentioned that we have received, so that is why next point is not coming, that if not the details thereof. In our opinion, proper books of accounts as required has been kept as it appears from the examination of the books, and adequate returns have been received from the branches not visited by us. Right? So I was giving you this example. So I hope it is clear. So whether or not, so see, we do not have observation comment on financial statement and matters which may have adverse effect. In our opinion, the standalone financial statement comply with accounting standards. So whether positive or negative reporting is required, right? Now, let me just take you through all these points. So first and foremost, the A point says that whether the auditor has sought and obtained all information and explanation, and if not, the details and the effect on the financial statement. B point, whether in his opinion, proper books of accounts have been maintained and proper returns have been received from the branches which were not visited by him, right? Then whether he has received the report on accounts of branch office. So see, these 2 points are relating to branch. So with respect to the branches, the financial statements are prepared by the respective branches, and let's say if the audit has been done by some other auditor. So this first point says that with respect to the branches for which are not visited by this auditor in question, so he'll see whether proper returns. So proper returns is proper details from that branch. Returns is that the sales, let's say there are certain sales. So whether that information has been received or not. And if, let's say, the audit of the branch has been done by some other auditor, whether the report on accounts of the branch office has been received by the principal auditor in question and the manner in which the same has been dealt with, right? Then auditor will mention whether the balance sheet and P&L are in agreement with the books of accounts and the returns, whether the books of accounts have been prepared after complying with the accounting standard, whether any observation comments of auditor with respect to financial matters or transactions are there which have an adverse effect on the functioning of the company. So how was this point mentioned? F point. We do not have any observation comments on the financial statement matters which have adverse effect. So whether it is positive or whether it is negative, it will be reported, right? Then whether any director is disqualified under section 164 subsection 2. So it will not, don't just think it that the auditor has to just inquire. So even if no director is disqualified, this will be mentioned. How it will be mentioned? We see on the basis of written representation received from directors taken on record by BOD, none of the director is disqualified as on this from being appointed as the director under section 164 subsection 2. If any director is disqualified, that will also be mentioned. If no director is disqualified, this is the way it shall be reported, right? Then whether the auditor has any qualification, reservation, adverse remark relating to maintenance and other connected matters relating to maintenance of accounts and other connected matters. So auditor will mention we do not have any qualification, reservation, adverse remark relating to maintenance of accounts and other connected matters. Okay. Now with respect to this I point, so auditor will mention whether the company has adequate internal financial control with reference to financial statement and its operating effectiveness. So whether it is operating effectively also or not. Further, this reporting is not applicable with respect to private company, which is one-person company, which is a small company, or a company having a turnover of less than 50 CR as per the latest audited financial statement, and having aggregate borrowing from banks, financial institutions, or any other body corporate at any point of time during the financial year less than 25 CR. So this turnover is to be seen as per the last day of the financial audited financial statement, and this is to be seen at any point of time during the financial year. We all have done this point earlier also. Quickly tell me, where have you studied this point relating to IFC? Quickly send in your replies. Quickly. ठीक है. And then this was point number I, right? ठीक है. Now point number J. See, it says that point. So auditor is reporting. So this is the point with respect to section 143 subsection 3. So it says that auditor shall state such matters which are required as per Rule 11 of Companies Audit and Auditor Rules 2014. So there are various matters which are given in Rule 11 of Companies Audit and Auditor Rules 2014, on which also the reporting is required. So what are those matters? See, now students, I'll need your understanding and your learning and revision of chapter number 5, right? First of all, foremost, let us see what are those matters. So Rule 11 of Companies Audit and Auditor Rule 2014, it says that the auditor will also state that whether the company has disclosed the impact on the financial position with respect to impact of what? The litigations on the financial positions, right? Whether the company has made provision for foreseeable losses, whether there is any delay in transferring of amounts to the Investor Education Protection Fund, right? Let me just take you through the module for this topic. But see, just let's see. J point is with respect to what? Rule 11. So with respect to the other matters included in audit report in accordance with Rule 11, to the best of our information, according to the explanation given to us, the company has disclosed the impact of pending litigation. Refer to note number so and so. See how the same is given. The company has made provision as required under applicable law for material foreseeable losses, and refer to note number so and so. There has been no delay in transferring the required amount to the Investor Education Fund, right? Are you able to understand now? Let me just take you through your module for this clause. Just a minute. So this. Okay. So we are talking about what? Matters required by Rule 11 of Companies Audit and Auditor Rule 2014. So whether the company has disclosed impact, if any, of pending litigation on its financial position, whether the company has made a provision as required under the law accounting standards for material foreseeable losses, if any, on long-term contracts, including derivative contracts, and whether there has been delay in transferring the required funds, the amount required to be transferred to Investor Education and Protection Fund. Is it clear? I'm leaving D clause just for a minute, and then E. What is the E point? Whether dividend declared or paid during the year by the company is in compliance with section 123. Right? So whether the company has declared dividend or paid the dividend during the year, the same should be whether it is in compliance with section 123 of the Companies Act. And the F point, it says that whether the company has used such accounting software for maintaining the books of accounts, which has a feature of audit trail. So audit trail is what? From the very beginning till the end, all the documents are recorded. The trail is kept. Whether the same has been operated throughout the year for all transactions recorded in the software, and whether the audit trail feature has not been tempered. This is T, tempered with, and the audit trail has been preserved by the company as per the statutory requirements of the record retention. So it basically, this point is talking about what? Accounting software. So whether it has a feature of what? Audit trail. And then with respect to this feature, auditor is going to see whether it operated throughout the year, whether the same was not tempered, whether it has been preserved as is required by the statutory requirements for record retention. Is it clear? Right. Now, with respect to D point, I need answers from all of you. Have you done this D point somewhere? This D point is having three sub clauses. Quickly send in a reply. Where were these points? Given on page number 8.71 of your module. Absolutely correct. Bhumika, Om Krishna Gupta, Swati, Shoaib. Absolutely correct. And that's good that you are able to remember and relate. So rule 11 wants that says that with respect to these points. So what were these points? So whether management has represented that to the best of its knowledge and belief other than those disclosed in notes to account, no funds have been advanced or loans invested. Remember, to intermediary, ultimate beneficiary. Remember, and this point says that no amount has been received. And the last point says that based on such audit procedures that the auditor has considered reasonable, appropriate, nothing has come to their notice that has caused them to believe that the representations made above are, you can subclause 1 and 2 are what they contain material misstatement. So students, I'm not repeating this point. Why? Because we all have done this in detail when we did chapter 5 में share capital and loans and borrowings का, when we did the additional regulatory information, we have covered this point there. I hope it is clear. I hope it is clear. And then it says that with respect to the points which are mentioned under section 143 subsection 3, if any of the matter is answered in negative or with qualification, then the reasons are also to be given. And where is this requirement? This is contained in section 143 subsection 4. Right. And then section 143 subsection 9 says that the auditor is going to comply with the standards on auditing. Further, section 143 subsection 11 says that the CG, the central government may, after consultation with NAFRA, by special or your National Financial Reporting Authority, by general or special order, it may direct such class of companies specified in the audit that with respect to those class of company, the audit report shall also include statement on such matters as may be specified. And this is basically CARO 2020, which will be starting after the break that we will just have. Just give me 2 more minutes. Now, with respect to reporting on frauds. So section 143 subsection 12 and rule 13 of companies audit and auditor rules 2014. Right. So reporting to CG is required, and in certain cases reporting to audit committee or the board is required. So when is reporting to CG required? When the auditor has a reason to believe that an offense of fraud involved or expected to involve individually an amount of 1 CR or above. Such offense is been or has been committed in the company by its officers or employees. So if the auditor has a reason to believe that the offense of fraud involving or expected to involve amount individually an amount of 1 CR or above. So the amount is 1 CR or above, and such offense has been or is been committed in company by its officers or employees, the auditor shall report to the central government in the timely manner as prescribed, in the time and manner as may be prescribed. So where is it prescribed? Rule 13 of the company's auditor and auditors rule, right? And then reporting to audit committee or board, it says that if the amount is lesser than 1 CR, then the report will be given to audit committee as framed under section 177. If there is no audit committee, then to the board in the time and manner as may be prescribed. Is it clear? So with this, we have done our reporting responsibilities of the auditor under the Companies Act 2013, apart from CARO 2020, which we will be starting after the break that we will just have. And students, entire CARO 2020, we are going to revise in a very easy manner. You will see that we will discuss each and every point in a very easy manner. You will be able to understand it. You will be able to remember it also. So just take a very quick break of 10 minutes, and after 10 minutes, I'll start with CARO 2020. Don't miss this session after the break, because CARO 2020 is really very, very important, right? So we will take a break of 10 minutes here. Okay. And now we'll be starting with CARO 2020. CARO is what? Companies Auditors Report Order 2020. So see, these are the powers that are conferred to the CG. Just a minute. So these are the powers which are conferred to CG in terms of section 143 subsection 11 of the Companies Act. So it says that central government may, after consultation with National Financial Reporting Authority, make, so the central government has made what? CARO 2020. Earlier it was CARO 2016, which was superseded by CARO 2020, right? Now this CARO 2020, it consists of 4 paragraphs. Paragraph number 1 is with respect to the applicability. That is, with respect to what companies or with respect to which companies the auditor's report shall include CARO 2020 report also, right? Then paragraph 2 says that auditor's report to contain matters specified in paragraph number 3 and 4. Further, what are paragraph 3 and 4? Paragraph 3 says that these are the matters which are to be included in audit report. So 21 clauses are there. 21 matters are there that are to be included in auditor's report. Paragraph 4 says that with respect to unfavorable or qualified answer, the reasons are also to be mentioned. Simple. So now let us just quickly see what is contained in paragraph 1. So we said it is what with respect to the application. So CARO 2020 is applicable to every company, including foreign company, except, so again a 3-mark question can be made here. Applicability of CARO. So CARO 2020 is applicable for every company, including foreign company, except banking company defined under the Banking Regulation Act 1949, insurance company defined under the Insurance Act 1938, or Section 8 company, or one-person company or small company, or so it is not applicable to all these companies except for banking company, insurance company, your Section 8 company, one-person company, small company, or a public limited company which satisfies the below criteria. A private, sorry, I think I said public. A private limited company which is not being a subsidiary or holding of a public company. So if a private limited company is a subsidiary or holding of a public company, CARO will be applicable. So both the things should be satisfied. So private limited company which is not being a subsidiary or holding of a public company, and so this signifies what? And so both the conditions are to be fulfilled, and the paid up share capital plus reserves is less than equal to 1 CR as at the balance sheet date. So basically the language that has been used is what? The paid up share capital and reserves and surplus not to more than 1 CR. Not to more than. Not more than. Or I can say less than equal to, because it says not more than 1 CR. Then the total borrowings from banks or financial institution at any point of time during the financial year is not more than 1 CR. Or the total revenue as per Schedule 3, including the revenue from discontinuing operation, does not exceed what? 10 CR during the financial year. Right? So if all these conditions are fulfilled, then with respect to that private limited company, CARO 2020 will not be applicable. Right? And person company as defined in clause 62 of section 2, and small company as defined in clause 85 of section 2 of the Companies Act. Right? Paragraph 2 says that auditor report shall contain matters specified in paragraph number 3 and 4. Further, it also states that the CARO reporting is not applicable with respect to consolidated financial statement except clause 21 of paragraph 3. Right? So just try to understand this. See, this is a holding company, right? And it has, let's say, 4 subsidiaries. So CARO is applicable with respect to all these companies. So this clause, this paragraph 2, it specifically states that here with respect to the consolidated financial statement, CARO reporting is not required. However, reporting as given in clause 21 of paragraph 3 is required with respect to this holding company. However, standalone ABCD CARO reporting will be there. Clear? What is that 21 clause? We will do as and when we'll start with all these points. So I hope the applicability and this paragraph is clear. Then we'll be starting with all the matters to be included in auditor's report given in paragraph number 3. Clause by clause, I'll complete all 21 today. I'll try to complete all 21 today. Right? And then, chalo, paragraph number 4 we will discuss later on. Is it clear so far? Swatika, Bhumika saying clear. Others also please reply. Sukaina, Om Krishna Gupta is saying yes. Chalo, good. Now, see, the first point is related to what? PPE and intangible assets. And now, here I like to stop. I like to pause and tell you that now your understanding of chapter number 5, the additional regulatory information that we have discussed, revised when we were doing our sessions for chapter number 5, your understanding of those provisions, additional regulatory information will be required. And I'll not be repeating the point. Yes, I'll tell you that this is mentioned in that relevant additional regulatory information of chapter number 5. But as such, I'll not be repeating that point in detail now, right? So now the first clause of paragraph number 3 of CARO 2020 is with respect to the property, plant, equipment and intangible assets. So with respect to PPE and intangible assets, 5 points are there with respect to which the auditor will report. So the first point is whether proper records with respect to the quantity and the situation of property, plant and equipment, whether the same has been maintained by the company or not. Second, the next part of point number 1 is whether proper records with respect to full particulars of intangible assets have been maintained by the company or not. So basically full particulars of PP, which will also include what? Quantity and situation, and full particulars of intangible assets. Full particular means when it was purchased, the purchase price, the depreciation or the amortization so far, right? So all these things will come, right? First point is whether, so the language is whether the company is maintaining proper records showing full particulars including quantitative details and situation of PP, and whether the company is maintaining proper records showing full particulars of intangible assets, right? Then whether the PPE is physically verified by management at reasonable intervals. So auditor will mention what? Yes. After going through it, that the PPE is verified by the management, let's say after a period of 2 years or after every 3 years, in such a way that within a period of 3 years, all the PPE are physically verified, which is reasonable. Right? And if any material discrepancy is there, whether the same has been properly dealt in books of accounts. So this was the second point with respect to PP and intangible assets. Now the third point, whether the title deeds of the immovable property other than those taken on lease, the immovable property disclosed in financial statement, whether the same is held in the name of the company, and if not, then the auditor is going to give 6 details. Let us just have a look at the table. So I have not made the table in my notes. I'll refer to the module for that. The description of the property, the gross carrying value, held in the name of, whether promoter, director, or the relative or employee, period for which held, indicate range, and where appropriate, the reasons for not being held in the name of the company also indicate the dispute. Now tell me whether you have done this point somewhere. Quickly send in your replies. So a quick reply from Swati, Om Krishna Gupta, Shoaib. Where have you done this? So Swati has answered it correctly. Shoaib, Om Krishna Gupta replied, where have you done this topic? Chapter 5, correct. Swati 5, correct. Disclosure of PP, additional regulatory information. So see, there the company was required to give an additional regulatory information that whether the title deeds of all immovable property disclosed in the financial statements, whether these are held in the name of the company. Now here under CARO 2020, auditor will report on that. Right? Is it clear? Same way, the next point is with respect to the revaluation. So whether the company has revaluated the PPE, intangible assets, or both, and if yes, whether the register valuer's valuation has been taken into account. And the auditor is also going to specify the change if the change is more than equal to 10% of change in aggregate net carrying value of each class of PP or intangible assets. Remember this point you all also have done. Then whether any proceedings have been initiated or pending against the company for Benami property and whether the same has been disclosed in the financial statement. So the chapter 5 says that these are the disclosure requirements by the company. Your chapter number 8 says that now auditor comes your turn. You check all those disclosures and report here under CARO 2020. Is it clear? So for all those who have done chapter number 5 in detail and more specifically additional regulatory information, they are going to find this CARO 2020 very, very easy to understand and learn. Okay, so 5 points with respect to PPE intangible assets. First is whether proper records with respect to full particulars of quantity and situation of PPE and proper records of full particulars of intangible assets have been maintained by the company. Whether the PPE has been physically verified by management at reasonable intervals, and in case any material discrepancies there, the same has been properly dealt in books of accounts. Title deeds of the immovable properties disclosed in the financial statement, whether the same is held in the name of the company, and if not, then the auditor is going to give a information in this table which is given in your module. Whether the company has revalued the PPE intangible assets or both, and in that revaluation, just a minute, and whether, and if so, whether the revaluation is based on the valuation of registered valuer. Also specify the amount of change if the change is more than equal to 10% in aggregate net carrying value of each class of PPE intangible assets, and whether any proceedings are initiated or pending against the company for the Benami property under the Benami Transaction Prohibition Act. So see, we have done this clause 1. This is with respect to record, or I'll record. Then this is with respect to physical verification. Then this is with respect to title deed. Then the 4th point relating to revaluation, and the 5th point relating to the proceedings under the Benami Prohibition Transaction Prohibition Act, right? So we have done PPE. Second clause is with respect to inventory. So you will say inventory may be more or less whatever we have done for PPE, it is the same. So whether the physical verification of inventory by the management is conducted at reasonable intervals. If so, whether the management's coverage and the procedure is appropriate. Further, if the discrepancy is there, if the discrepancy is more than equal to 10% in aggregate of each class of inventory is noticed. If yes, how, whether the same has been properly dealt in the books of accounts. Okay. Also, again, go back to chapter number 5 ka knowledge. Whether during the any point of time of the year, the company has been sanctioned the working capital limit of more than 5 CR in aggregate from bank or financial institution against the security of current assets? And if yes, whether the quarterly returns filed with banks, financial institutions are in agreement with books of accounts, and if not, give the details. So there, this 5 CR was not mentioned as such. So there was a responsibility on the company that if any working capital limit is there, or any loan has been taken against the security of current assets, then if the quarterly returns are filed, whether they are in agreement, and if not, give the details. So now CARO 2020 contains the reporting responsibility for the auditor. So this is with respect to your inventory, right? So we have done inventory also. The third point, third clause says investments, guarantees, securities or loans. So tell me first and second point whether these are clear. First point relating to PPE and intangible assets had 5 subpoints, and the second clause relating to inventory had 2 subpoints. Okay. Now, whether the company has made any investments, guarantees, security, loans and advances in the nature of loans, whether secured or unsecured, to company, firms, LLP or any other party. So if during the year the company has made investments, loans, security, loans and advances in the nature of loans, whether secured or unsecured, to company, firm, LLP or any other party, if yes, then reporting with respect to further 6 points is required. Clear? What are those 6 points? So see, this clause segregates the reporting into 2 parts. First is what? That if such loan has been given, or guarantee or all those things have been given, the aggregate amount during the year plus balance outstanding as on the balance sheet date, that is to be given. That during the year kitna diya hai and balance outstanding as on the balance sheet date, but bifurcate it into 2 parts. First is what? Given to subsidiary, joint venture, associate, given to other company. So if such loan advances in the nature of loan, your guarantees, just a minute. Your loans and advances in the nature of loan, your investments, guarantees, securities, whether secured, unsecured, has been given to any such party, then the aggregate amount given during the year and the balance as on the balance sheet date separately with respect to subsidiary, joint venture, associate, that is the group companies and the other companies. Clear? This was the first point. Then, whether the terms or conditions are not prejudicial to the company's interest, not harmful for the company, they are in the favor of the company also. The schedule of repayment of principal and interest as is stipulated, as is decided, whether the repayments and receipts are regular. So company has given the loan, right? So when that loan has been given, whether the schedule of repayment has been decided and the repayments and the receipts, whether these are regular or not. If any amount is overdue for more than 90 days, reasonable steps for recovery, whether they have been taken or not. Why? Because see, all these show genuineness, na, and all these show that these are not given to as such related parties, right? That it is not just given and the same is not been recovered. So if the amount is overdue for more than 90 days, whether reasonable steps have been taken. So reasonable steps can be what? If mails have been given, have been sent, or let's say any complaint has been filed. So all those things. If any loan is falls due during the year, falls due for repayment during the year, but instead of receiving the payment, the same was renewed or extended, or any fresh loan was given to settle the existing loans to same parties. So the loan was repayable, but instead of taking back the loan, further amount was given to same party. If yes, the aggregate amount of renewed, extended, and fresh loan, and the percentage of the aggregate amount of renewed, extended, and fresh loan to the total loans and advances. And this point is not applicable where the principal business is to give loan, because there though it is going to happen now, right? And then the last point says that where any loan or advance in the nature of loan has been given which is repayable on demand without specifying terms and the period of repayment. If yes, what is the aggregate amount and the percentage to the total loans, and what is the aggregate amount of loan given to promoters or related party. Go back to your understanding, your learning of chapter number 5. Remember, we have done this point as a management's responsibility to disclose. Quickly send in your replies. Are you able to relate it to chapter number 5? Right? So this was with respect to the loans, investment guarantee, security, loans and advances in the nature of loan, secured or unsecured, given to company, firm, LLP or any other party. So first of all, aggregate amount given during the year and balance outstanding as on the balance sheet date separately with respect to subsidiaries, joint venture, associate and other companies. And auditor to see whether terms and conditions are not prejudicial to the company's interest. Schedule of repayment of principal interest stipulated plus the repayment and receipts, whether these are regular. If the amount is overdue for more than 90 days, whether reasonable steps for recovery has been taken. If it has fallen due during the year and it is renewed, extended or fresh loan has been given to settle the existing loan to the same parties, then aggregate amount renewed, extended, fresh, and the percentage of such aggregate amount to the total loans and advances. And if loans and advances in the nature of loans are repayable on demand without specifying terms or conditions, so it is not mentioned what will be the percentage of interest, what is the repayment time period. So in that case, aggregate amount or percentage of total loans and aggregate amount of loan to promoters or related parties. Is it clear? Is it clear? Right. Now, with respect to fourth point, which is very simple. So, in respect of loans, investments, guarantees, or securities given, whether the company has complied with Section 185 and Section 186 of the Companies Act. If not, the details thereof. So, Section 185 is with respect to loans to directors. Section 186 is respect to loans and investments by company. So, in respect of loans, investment guarantees and securities, whether the requirements of Section 185 and 186 have been complied with, if not, the details thereof. Right? Clause 5. So it says that if the company has accepted the deposits or deemed deposits, then whether the RBI directives have been complied with. Also, whether the provisions of section 73 to 76 and other provisions and rules made thereunder have been complied with. If not, what is the nature of contravention? If the order of Company Law Board, National Company Law Tribunal, RBI, or any other court or tribunal is there, whether the same has been complied with. So let me just take you through the module so that you are able to, you become familiar with the module also. So we are on clause number 5. So in respect of deposits accepted by the companies or amounts which are deemed to be deposits, whether the directives issued by RBI, provisions of section 73 to 76 or other relevant provisions of Companies Act and rules made thereunder wherever applicable have been complied with, if not, the nature of such contravention be stated. If an order has been passed by CLB, National Company Law Tribunal, RPI, or any other court or tribunal, whether the same has been complied with or not. Is it clear? Now, the sixth clause, whether the company is required to maintain cost records by CG as per section 148 subsection 1, 148 subsection 1, whether the same has been maintained or not. So if the cost records are to be maintained, whether the same have been maintained or not. So under CARO 2020, auditor is just to specify whether the same has been maintained or not. Right? Now, with respect to the seventh clause, it is relating to statutory dues. So statutory dues like GST, PF, ESI, customs or income tax. So it has been divided again. Here also there is a division in two parts, that is disputed statutory dues and undisputed statutory dues. So disputed is where there is certain litigation, right? So what is the amount involved and the forum again, forum where the same is pending. So let's say with respect to income tax, if the amount involved is 1 CR and the same is pending before IT-80, so that will be mentioned. In case of undisputed, see disputed में तो simple है ना, what is the amount involved and the forum where it is pending. With respect to undisputed, so undisputed statutory dues, that is there is no dispute whether the company is regular in paying. If not, if yes, then to it is okay. Auditor will mention company is regular in paying, yes. If not, then the extent of arrears outstanding as on the last date of the financial year, but outstanding for a period of more than 6 months from the date it became payable. So if any such undisputed statutory due is payable as on the last date of the financial year for a period of more than 6 months from the date when it becomes payable, the same shall be mentioned here under CARO 2020. So this was clause number 7. Now, with respect to clause number 8, transaction not recorded in books of accounts which are now surrendered or disclosed under Income Tax Act. If yes, whether properly recorded in books of accounts. Again, your understanding of chapter number 5 ka notes. So there was a reporting responsibility on the company here, or disclosure requirements for the company, and here it is a reporting requirement by the auditor, right? The 9th clause, repayment of dues. So now we are talking about the loan which were taken by the company and company is repaying the dues. Earlier it was what? Whether the receipts are regular or not. The loan was being given by the company. Here the loan is being taken by the company. So repayment of dues, loan taken by company. So whether the company is in default in repayment of loan or interest to any lender. If yes, the period and amount of default, and again, the format is given in your module. I have not made it here. So the nature of borrowing, including debt instruments, the name of the lender, the amount not paid on due date, whether it was principal or interest, the number of days for which delay or it is unpaid, and remarks, if any. So lender-wide details will be provided in case of defaults to banks, financial institutions, and governments. So it will not be mentioned that bank, just bank and a total amount, but to HDFC, how much is pending, to let's say BOB, how much it is spending. So all of that shall be mentioned. Is it possible? Is it clear? Right? So these 6 details. Then whether the company has been declared as willful defaulter by bank, financial institution, or other. Again, chapter 5 may you all have done this. Whether the term loans have been utilized for the purpose for which they were obtained. If no, the amount and the purpose for which it is used. Again, chapter 5 ke notes mein, right? Then whether any short-term loan has been utilized for long-term purpose. If yes, the nature and the amount. And the next point, whether the company has taken any funds from any entity or person to meet the obligation of subsidiary, joint venture, and association, and if so. So whether the company has taken funds from any entity or person, why? To meet the obligation of subsidiary, joint venture, association, and if so, the details, the nature, and the amount so taken. Clear? And last point, with respect to this clause, it says that whether the company has raised loan on pledge of securities held in subsidiaries, joint venture, and associate, and if so, the details and the report with respect to the default in repayment. Is it clear? So this was with respect to clause number 9, right? So if you just look at this summary, So we have done clause number 1 relating to PPE, intangible assets, clause number 2 relating to inventory, clause number 3 relating to investments, guarantee security loans, clause number 4 relating to loans given, that is section 185 and 186 ka compliance, clause number 5 relating to deposits and deemed directives, whereby we talked about RBI directives section 73 to 76 and any other order, cost record section 148 subsection 1, statutory dues, disputed and undisputed, transactions not recorded in books of accounts surrendered under the Income Tax Act, clause number 9, repayment of dues, loans taken by the company. Now let us start with clause number 10 of CARO 2020. Before that, quickly send in a reply, jitna bhi kiya hai, whether it is clear or not. So quick responses from Shoaib, Om Krishna Gupta, Swati, Bhumika. That's good. So now the 10th clause says, one more reply from Akshara. Chalo, good. So the 10th clause consists of 2 points. So this is basically with respect to the money raised, right? So if the money has been raised in IPO or FPO during the year, including the debt instruments, so whether the money so raised has been applied for the purpose for which the same was raised, and if not, the details of the delay and the default, and along with that, if subsequently the same has been rectified, the details of the subsequent rectification, right? This was subclause A. Subclause B says that if the company has made preferential allotment or private placement with respect to shares or convertible debentures, then whether the requirements of section 42 and 62 have been complied with, and the purpose for which it has been used, whether it has been used for that purpose. If not, what is give the details along with the amount and the nature of non-compliance. So students, you will see wherever the money is raised, one of the common points is what the purpose for it, which it has been used, and the nature of non-compliance, right? This was 10th clause. Now with respect to 11th, this is basically with respect to fraud. So 3 sub clauses are there. So the auditor is going to report whether a fraud by company or fraud on company is noticed or reported during the year. If yes, the nature and amount. That's it. Whether a fraud by company or fraud on company is noticed or reported during the year, the nature and the amount. Then, if under section 143 subsection 12, report has been filed with central government with in terms of ADT 4. So the same needs to be mentioned here that the report was submitted to central government under section 143 subsection 12. Whether any whistleblower complaints have been received by company during the year, if any whistleblower complaint has been received by company during the year, whether the auditor has considered that. See, students, I am not going in detail as such as to what is whistleblowing, or I'm not discussing each and every, you can say specific terms. Yes, if you have any doubt, you can always send in your queries. I'll definitely discuss that. But because of the paucity of time and because of the fact that these are revisionary classes, I'm just trying to revise the entire CARO 2020, or I'm just trying to revise the entire chapter. So in case if between the session you find anything which is not clear or any term which is not clear, you can always send in your query. And in fact, you should send in your query. Okay? So this was the point with respect to clause number 3 subclauses for clause number 11. Now the next clause is relating to Nidhi companies, right? So basically the chit fund companies, right? So whether so this is specifically applicable with respect to the entity, like in case where the client is a Nidhi company as defined in Companies Act. So if the client is not a Nidhi company, this point shall not be applicable. Is it clear? So, in case the client is the Nidhi company, so whether the company has complied with the net owned fund to deposit ratio of 1:20 as is required, right? Further, whether, just a minute, let me just tell you the page number also. One of the students has asked me. So, we are on page number 8.80. So, it says that whether the Nidhi company has complied with net owned funds to deposit ratio of 1:20, whether the Nidhi company is maintaining 10% unencumbered term deposits as per the rules specified under Nidhi Rules 2014. Unencumbered is free from any, you can say free from any securities. Okay? So 10% unencumbered term deposit should be there as per the rules, right? And whether the company has made any default in payment of interest or repayment, and if so, the details thereof. So with respect to Nidhi company, 3 sub-clauses, right? Further, this 13th point is very simple, related party transaction. So whether the company has complied with section 177 and section 188, and whether the disclosure is as per the relevant accounting standard. Simple. Then is your clause number 14. And it is very simple. So the statutory auditor is going to report that whether the company is having an internal audit system which is commensurate with the size and nature of the business. Commensurate is apt. Like it is okay for the size and nature of the business of the company. Further, whether the reports of the internal auditors have been considered by the statutory auditor. Is it clear? So this is clause number 14. Clause number 15 is with respect to non-cash transactions with the directors and persons connected with him. So you have to just understand that section 192 is to be complied with if any non-cash transaction with directors and persons connected with him, if yes, then whether the provisions of section 192 have been complied with by the company or not, right? Clause number 16, again, this is with respect to NBFC. So if the client is an NBFC, then only this point will be applicable. So non-banking financial company, right? So whether the company is required to be registered under section 45 IA of RBI Act 1934. If yes, whether the same has been obtained or not. So auditor will verify that and he'll mention here. Then whether the company has conducted any activity, non-banking financial activity or any housing finance activity without obtaining a valid certificate. So NBFCs are required to get registered and they are required to obtain certificate. So first point says whether the NBFC is required to get registered under section 45(1)(a), if yes, whether the same has been obtained. The second point says that whether the company has conducted any non-bank financial services or any housing finance activities without holding valid certificate. The C point says that, see what is CIC? Core investment companies. So one of the type of NBFC is core investment company, right? So it says that if the company is CIC, core investment company, so whether it has fulfilled the criteria for getting this CIC name. So whether it has fulfilled that criteria or whether it is exempted and whether it continues to fulfill this criteria. So when it got this CIC certification, so whether the criteria was fulfilled or was it exempted? And if that criteria was fulfilled, whether it continues to fulfill it right now also. Further, if the group, let's say there is a group having various subsidiaries. So if the group has more than one CIC, core investment company, the auditor is required to indicate the numbers of such CIC. Clear? So with respect to NBFC, 4 further sub clauses. So you may get a 3 mark or a 4 mark question that you are conducting the audit of NBFC. What are the CARO specific CARO reporting requirement for NBFC? So specific कौन सा यही वाला point है? Is it clear? This was 16th clause. Now 17th clause. Whether cash losses, whether the company has incurred cash losses during the year, financial year, or immediately preceding financial year. If so, state the amount. So auditor is going to mention, so if the company has not incurred cash losses, so auditor will mention that the company has not incurred cash losses in this year or preceding financial year. Or the second situation can be company has incurred. So the company has incurred cash losses, let's say in the current financial year, amounting to so and so. Clear? Then the 18th point. If the statutory auditor has provided resignation during the year, if there has been any resignation of the statutory auditor during the year, if yes, whether auditor has taken into consideration the issues, objections, concerns raised by the outgoing auditor. So if let's say you have joined the, you have become the statutory auditor of the company in midst of the year, and one of the statutory auditor, the earliest statutory auditor, he has resigned. Then whether you are the current auditor, na, you are reporting under CARO. So whether you or the auditor has taken into consideration the issues, objections, concern raised by the outgoing auditor. Clear? 19th point. See, just try to understand this. It says that, so just try to understand this part. Whether auditor is of the opinion that no material uncertainty exists as on the date of audit report. It is not saying balance sheet, as on the date of audit report. Material uncertainty with respect to what? Whether the company will be capable to meet the current liability existing as at the balance sheet date. So current liability existing as at the balance sheet date, as and when they fall due within a period of 1 year from the balance sheet date, right? So whether auditor is of the opinion that there is no material uncertainty and the company will be able to meet its current liability that existed as on the balance sheet date. And such opinion of the auditor shall be based on the auditor's analysis of various financial ratios, the aging schedules, expected date of realization, for example, debtors ka, है ना? Expected date of realization of fixed assets, payment of financial liabilities, and other information, and auditor's knowledge of board of directors or management plans. For this point, let me just take you through the module so that you are able to understand the language. So this is on page number 8.81 of your module, 19th clause. So on the basis of financial ratios, aging, expected date of realization of financial assets, like your debtors ka realization, right? Payment of financial liabilities, other information accompanying the financial statements, auditor's knowledge of board of directors and management plans. So based on all these, whether the auditor is of the opinion that no material uncertainty exists as on the audit report, date of audit report, that what material uncertainty about what? Whether the company is capable of meeting its liability existing as at the balance sheet date and when they fall due within a period of 1 year from the balance sheet date. So basically, audit, this point is somewhat relating to going concern only. Are you able to correlate or relate it? Quickly tell me whether these 19 points are clear. Just a minute. So we have done further after we had done till 9. So 10th clause is relating to IPO, your PFO, your professional allotment, private placement. 11th clause is with respect to fraud, whereby you have done 3 subpoints. Nidhi company, whereby again you have done 3 subpoints, right? There were 3 subpoints only. Let me just check. Yes. Then related party transactions, internal audit system, 2 sub-points are there, section 192, NBFC, 4 sub-points are there. Then cash losses, your resignation by statutory auditor, going concern, which we have just done. And then we are left with 2 clauses, that is CSR and CFS. Quickly tell me whether it is clear. Swati is saying clear. Bhumika saying clear. Om Krishna Gupta saying clear. Others also please reply. Right? So now the 2 points relating to CSR and CFS. So the 20th clause, it is basically with respect to what the CSR amount that is set aside. So with respect to section 135 companies, so this point, this reporting requirement is there with respect to the companies where section 135 is applicable. So again, this point is divided into 2 points, that is with respect to ongoing projects and with respect to other than ongoing projects, right? With respect to ongoing projects and with respect to other than ongoing projects. So first of all, let us do the ongoing projects wala point. So it says that where on account of where any amount is remaining unspent on account of ongoing project, so that whether that amount has been transferred to a special account or not. So any ongoing project is there, let's say school or any education facility has been built and the amount has been unspent. So it will be transferred to a special account. This is with respect to ongoing projects. Now with respect to other than ongoing projects, if there is any unspent amount, the same shall be transferred to a fund as mentioned in Schedule 7 to the Companies Act within 6 months of the expiry of the financial year. So it shall be transferred to the fund as specified in Schedule 7 within 6 months of the expiry of the financial year. So whether the same has been done or not. So this is with respect to the CSR companies on which section 135 is applicable. Is it clear? And the last clause, clause 21. So if you remember when we did paragraph number 2, we saw that the auditor report shall include matters specified in paragraph number 3 and 4. And we also saw that the CARO reporting is not applicable to consolidated financial statement except for clause number 21. So see, it is a very simple clause. It basically says that the example that I told you at that point also. So CARO 2020 is not applicable to, or CARO reporting is not applicable with respect to the consolidated financial statements, right? However, CARO reporting is applicable here, standalone, but it is applicable. Now, this point says that if with respect to the CARO report of any of the company, the respective auditors have put any qualification or adverse remark on any of these 20 clauses, जो भी ऊपर 20 clauses थे. So, the detail of the company, that whether it is, let's say it is with respect to A Limited. So, A Limited. And the paragraph number of the CARO report, let's say on 12th clause and let's say on 14th clause, there was certain adverse remark. The paragraph number, this will be mentioned in the auditor's report of H Limited, So see, CARO companies included in CFS, right? So with respect to the standalone, the qualification and adverse remark by respective auditors. So details of the company and the paragraph numbers of the CARO report. So let me just show you the language, how it is written. So it says that clause number 21. Whether there have been any qualifications or adverse remarks by the respective auditors in company's auditor's report whether there have been any qualification or adverse remark by the respective auditors in the CARO report included in consolidated financial statement, right? If yes, indicate the details of the companies and the paragraph numbers of the CARO report containing the qualification or the adverse remark. Clear? So with this, we have finished all the 21 clauses of paragraph number 3, right? Now the last paragraph is paragraph number 4, which says that wherever any answer to these clauses is unfavorable or adverse remark, the reasons are to be stated. So if answer to any of the question in paragraph number 3 is unfavorable or qualified, the audit report is to state the basis, the reasons, right? And if the auditor is unable to express an opinion on any of the clauses, then indicate such fact that the auditor is unable to express an opinion and the reasons thereof. Is it clear? Is it clear? So let me just take you through the report once again, just 1 or 2 minutes. So we have seen that companies audit report order 2020, 4 paragraphs. Paragraph number 1 says applicable to every company, including foreign company, except banking company, insurance company, section 8 company, OPC, small company, private limited company, which is not being a subsidiary holding of a public company, and paid up share capital reserves is not more than 1 CR as at the balance sheet date. Total borrowings from banks and financial institution is not more than 1 CR at any point of time during the financial year. And the total revenue as per schedule 3, including the revenue from discontinuing operation, is not more than 10 CR during the financial year. And paragraph 2, now you all know. Paragraph 3 says that the auditor report shall include matters relating to these 21 clauses. So I hope it is clear, all the 21 clauses. And paragraph number 4 says that if any of the answers to question is in adverse or have any qualification, then the basis is to be given. If the auditor is unable to give the opinion, then with respect to any matter, then this fact and the reason is to be stated. So with this, we have covered CARO 2020, a very important topic. Quickly send in your replies. Have you found this discussion of CARO easy, interesting, and are you able to learn CARO 2020? So Bhumika Om Krishna Gupta is saying yes. Others also please reply. Swati Akshara are saying yes. Shoaib, Sunil Gangadev, students please reply. Chalo, theek hai. So now I'll be starting with Shoaib is saying yes, revised here. So now I'll be starting with one essay. Let's see whether we'll be able to finish that or not. But let us just start it. And students, any topic which is left, I'll definitely complete that topic. Maybe past year questions we won't be able to revise, or in this chapter specifically, I am not able to take any illustration or MCQ or your case study because of the paucity of time, but I'll definitely cover the topics that are left in this chapter, definitely in the next session, which is scheduled for chapter number 9. Quickly send me, you want me to start with another essay, or you want me to discuss the MCQs that are given in your module? Quickly send in a reply, MCQs or one more essay. So many of you are saying MCQ. So let us do this MCQ. Essay 299, Essay 600, Essay 710, which are left. I'll do that. I'll definitely cover them in the next session. So read this MCQ number 1. On page number 8.87. So just quickly do these MCQs. If still we are left with time, I'll finish up one more essay. So while expressing an unmodified opinion on financial statement, the auditor shall not use which of the following phrases: present fairly on non-material aspect, give a true and fair view, with the foregoing explanation, all of the above. Quickly send in your replies. See, present fairly non-material unmodified hai, so this is okay. Give true and fair view, this is okay. But with the foregoing explanation is not correct, so the answer will be what? C. because it says which of the following should the auditor shall not use, right? Then dash is a paragraph included in auditor's report that refers to a matter appropriately presented, disclosed in financial statement that in the auditor's judgment is of such importance that is fundamental to the user's understanding of the financial statement. So quickly send in your replies. So the answer to this is what? Emphasis of matter paragraph. So Om Krishna Gupta, Shoaib, Bhumika, correct. With respect to first answer, Shoaib, Swati, Om Krishna Gupta, absolutely correct. Swati, correct for second also. Now read this third question. Communicating key audit matter in the auditor's report constitute a substitute for disclosure in financial statement. Statement number 2, instead of modifying an opinion in accordance with SA 705, the statutory auditor can use key audit matter paragraph in the audit report with an unmodified opinion. What is the correct answer? So Om Krishna Gupta, correct. With respect to third question, others also please reply. Bhumika, correct. Swati, correct. So see, communicating key audit matter is a substitute for disclosure? No. Instead of modifying an opinion in accordance with SA 705, statutory auditor may audit key audit matter and then give an unmodified opinion? No. So the answer is what? D. Shoaib, Swati, Bhumika, Om Krishna Gupta, absolutely correct. Which of the following is not correct? This is very simple. So I'll not wait. Answer is what? C, because 705 is with respect to modification. Responsibilities of joint auditor are governed by SA. So let's do one thing. SA 299 is coming again and again. Let us just have a quick look at this SA 299. Shoaib was also saying, ma'am, please do SA 299. Om Krishna Gupta was also saying SA 299. So quickly, let us just have a look. See, what is the name of the essay? It is with respect to joint audit of financial statements, right? So we will quickly cover essay 299, which is joint audit of financial statements. See, appointing joint auditors is quite widespread with respect to big companies or corporations. So what is meant by joint audit? So basically, not only one auditor is appointed, but let's say 3 or 4 auditors appointed with respect to one company. So jointly, they will do the audit, right? So pooling together the resources, expertise of more than one firm of auditors to render an expert job in a given time period, which may be difficult to accomplish acting individually, right? So let's say with respect to one company, 2 or 3, more than one basically firms are appointed so that they can give an expert job. Acting individually, it may not be possible for the firms to give the quality work. So we are on page number, let me just see. Your advantages and disadvantages of joint audit is given. So see, joint auditors are appointed. We are on page number 8.65. So there will be sharing of expertise, mutual consultation will be there, lower workload, better quality, right? But and you can read all these advantages as homework. But again, there will be disadvantages of what? Fees will be shared, general superiority complex to some, problems of coordination, areas of common work being neglected. So again, this do it as a homework, right? Okay. Advantages, disadvantages you will do. So SA 299, it lays down the principle for effective conduct of joint audit. See, ultimately, what is the objective of joint audit? To achieve the overall objective of auditor given by SA 200. So overall objective क्या है? To obtain a reasonable assurance, to see whether the financial statement as a whole are free from material misstatement. So, but SA 299, it lays down the principle for effective conduct of what? Joint audit, right? Now, what are the requirements by SA 299? It requires that the engagement partner. So see, let's say A, B, C and Associates is a firm, and XYZ and Associates is a firm, and UBW and Associates is a firm who are appointed as the joint auditors. And A, X and U are what? The engagement partners. So 299 will require that the engagement partners from each joint auditor, that is A, X and U, and the other key members from each joint auditors, they are involved in planning. Simple. So basically, you'll see that whatever you have read with respect to the planning of audit or conducting of audit procedures, now jointly that will be done by all the auditors. Further, all the joint auditors will jointly establish an overall audit strategy that sets the scope, timing, direction of audit and guides the development of the detailed audit plan. ये सब पढ़ा हुआ है ना already, but jointly now it shall be established. Simple. Further, before the commencement of audit, the joint auditors shall discuss and develop a joint audit plan. Simple. The joint auditor should identify the division of audit areas and the common audit areas. So what are the division of work where the division has been there, and what are the common audit areas? Further, they will ascertain the reporting objectives. Further, the joint auditor should consider and communicate among all joint auditors the factors that are significant in directing the engagement team efforts. So if the joint auditor is aware about any of the significant factors in directing the engagement team efforts, it will discuss with all other joint auditors. Simple. Further, the joint auditor shall consider the results of preliminary engagement activities or similarly engagement performed. So you can see that whatever you have done so far now, up bus you are writing that jointly they'll do that. And the joint auditors will ascertain the nature, timing, extent of the procedures or the resources necessary to accomplish the engagement, right? Each joint auditor. So अभी तक ऊपर क्या था? All the joint auditors will do that. Also, each joint auditor will consider and assess the risk of material misstatement and communicate to the other joint auditor. So it will not happen that one joint auditor, ABC and associate is saying that XYZ and associate will assess the risk. Nahi. Each joint auditor will consider and assess the risk of material misstatement and communicate to the other joint auditor their assessment, right? Further, the joint auditor shall discuss and document the nature, timing, extent of audit procedures for common areas as well as for the specific audit areas. Very important, the joint auditor shall obtain a common engagement letter. Just a minute. They will obtain what? Common engagement letter and common management representation letter. See, it will not happen and that the management will again give written representation to ABC and associates, then the same written representation to UVW, then the same. No, common engagement letter. Further, work allocation document shall be signed by all joint auditors and communicated to those charged with governance. How the work is allocated among all the joint auditors, and the same shall be communicated to those charged with governance. Okay? Then, in respect of the audit work which is divided amongst the joint auditor. So if any work is divided that, okay, with respect to purchases, sales, or let's say with respect to the income items, ABC and associates will see. Let's say with respect to the assets, your XYZ and associates will see. So where the work has been divided, each joint auditor responsible only for the work allocated to such joint auditor, including proper execution of the audit procedure. So with respect to the work divided, that joint auditor will be responsible, right? And very important question, all joint auditors shall be jointly and severally responsible for. So all will be responsible for the audit work which is not divided. Simple. The decisions taken by all joint auditors under the audit planning in respect of common audit areas. Simple. Matters which are brought to the notice of joint auditors by any one of them and is in agreement among the joint auditors on such matter. If any matter has been brought to the notice of other joint auditors and all of them have agreed with respect to that also, they will be jointly and severally, they will be jointly liable. For examining the financial statement, comply with the requirements of relevant statute. The presentation disclosure of financial statements are required by applicable FRF. For ensuring that the audit report complies with the requirements of relevant statute, applicable essays, and other pronouncements issued by ICAI. So basically, these are what? These are the common work areas for which all are responsible, right? Then a very important topic, two topics are left, very simple but very important. So in case any joint auditor come across a matter which is relevant to the responsibility of other joint auditor and which deserve attention or disclosure or discussion, application of judgment by other joint auditors. So if ABC and Associates, they come across any matter which is of importance to UVW and Associates, right? Then the said joint auditor, ABC and Associates, it will communicate the same to all the joint auditors, all in writing prior to completion of audit. Simple. And the last point says that the joint auditors are required to issue a common audit report. Common audit report will be mentioned. Now you will ask me that if there is a disagreement between among the joint auditors, then what is the recourse? Then if there is disagreement with respect to the opinion or any matter covered by audit report, the joint auditor shall express their opinion in separate audit report. So let's say ABC and Associates and XYZ and Associates, they are in agreement, but UVW and Associates is saying something else. So both of them will issue one audit report. UVW will issue its audit report. But in the audit report issued by these two together, it will be mentioned that there is one more audit report given by UVW, and in the audit report given by UVW, it will mention that there is an audit report given by the other auditors. So the audit report shall make a reference to the each other's auditors report. Is it clear? So essay 299 relating to what? Joint audit of financial statements. So what is joint audit? You all have, I hope you have understood. So advantages, disadvantages you can do from module. So basically see whatever you remember that planning hoga, overall strategy establish hoga, then joint plan banega. Everything will be done by all the joint auditors. Joint auditor will identify the division of audit areas, common audit areas. They'll ascertain the reporting objectives. They'll consider and communicate among all joint auditors the factors that are significant in directing the engagement team efforts. They'll discuss what the results of preliminary engagement activity, ascertain the nature, timing, extent necessary to accomplish the engagement. Each joint auditor will make the assessment of ROMM and communicate to other. And they'll discuss and document NT for common as well as specific audit areas. Common engagement letter होगा, common management representation letter, work allocation document to be signed by all, communicated to those charged with governance. They will be responsible with respect to the areas which are not divided. They will be responsible for that area, only that joint auditor. However, all joint auditors for all these areas like the presentation disclosure, compliance with statutory requirements, work which is not divided, decisions taken under planning, right? All that. And if one auditor becomes aware of the matter which is of importance to the other, then he'll communicate to all the auditors in writing prior to completion of audit. And common audit report will be there. In case of disagreement, separate reports can be issued, but a reference to the other auditor's report shall be made. So with this, we have finished essay 299 on joint audit of financial statement. We are left with two essays, that is essay 600 and essay 710. I'll definitely try to take them in the next session when we will be starting with. So before starting with chapter number 9, I'll definitely finish these two essays. And students, We have completed chapter number 8, which is really very important. Only 2 essays are left that I'll finish up in the next session. But before concluding today's session, I really want all of you to please listen to me and go through the entire chapter given in your module along with illustrations, case studies. Since because of the paucity of time, I was not able to discuss the questions or your case studies, illustrations given in your module. In case you have any doubt, you can always ask them in the next session. But please go through the module and start studying, right? So hoping that you all have understood the entire chapter except for these two essays that I'll be taking up in the next session. So let us end today's session. So Akshara is saying sure, ma'am. Others also please reply whether you have understood the coming for the next session, you must go through the questions that are given in your module, right? So Bhumika Swati is saying yes. Chalo, we'll end the session and see you in the next session for chapter number 9 and 2 essays which are left for this chapter. So thank you. Bye bye. Good evening. Session over. Session over.